afternoon, everyone, and happy Friday. It's Alyssa Corm and Ed Carson here with a look at the stock market today. And since it's Friday, we're going to go a little bit more in depth and take a look at the market technicals and talk about a battle plan for the week ahead. And we have three stocks that we're going to analyze too, Ed.
That's right. We're going to take a look at Microsoft, VALE, and Polaris. Three stocks that are right around buy points. It was sort of surprising on day one of a new market rally attempt.
All right. And speaking of, let's pull up the NASDAQ and talk about this day one of the market rally attempt, an upside reversal in very dramatic fashion on this Friday. The NASDAQ gaining about 1.6% by the end of the day today. Meanwhile, we saw the Russell 2000 gain about 1.7%, the Dow up 1.9%, and the S&P 500 up 2%. So what do you make of how we finished this week, which really marked a pretty significant character change for the market, especially the NASDAQ?
That's right. And I'm going to start just with the beginning of the week because Friday doesn't make a lot of sense if you're not talking about the prior days.
Exactly. Put it into context. Yeah.
Put in the context, and I'm not showing it here, but Monday's gain here, okay, the NASDAQ rebounded from its 50-day line and sort of this half standard deviation off the line, came up to the 21-day and closed actually just a fraction above it. So that was nice. It didn't quite get above these old highs. So it was nice. We were still under pressure. We weren't that excited. Also, and the volume was lower. It was significantly lower than the prior days. So that was not a great sign, but that's okay. It was just one day. But then we immediately came down the next day. The volume wasn't tremendous either, but came right back to the 50-day line. And then these days, Wednesday and Thursday, plunging through the 50-day line, going below the old highs, old lows, then falling further below it, just in very heavy volume, very ugly action. Meanwhile, the S&P 500 will show that went through the 50-day line. The Dow came down to it. Lots of leading stocks breaking apart. We went into correction. I mean, it was just like we decided that was it. It was the character change was clear there. We were hanging on in here. Maybe we could bounce back, but no, this was different. We're done.
That's right. And looking at those regression channel lines, when we were up at that red dashed mark, the half standard deviation above our regression line, we were saying, Ed, you were right there too. We were getting cautious, saying to take profits into strength there. And we've talked about the deterioration in conditions over the last recent weeks here.
Yeah, I mean, obviously, just to look back on it, this is one reason why, especially with the market being so extended from the 50-day line, which sort of lined up with getting up to these levels at these points. If you did take profits, you might have said, oh, no, it went up a little ways. But, chances are, especially if you're in one of these growth stocks, the stock is probably lower now. I mean, it's almost impossible to tick it right at the top. But if you sold in here, even here when we're starting to come down, you're in a much better place than if you're saying, I'm hanging on to here. Friday's day, to make a Friday, it's a nice move. It was sort of scary mid-morning. We was, oh boy, we're just really falling in some of these speculative growth names. But you can see that it hasn't really changed. This trend is still down. And I'm going to switch over to a weekly, and I think it's sort of obvious. It doesn't still pretty ugly week.
Yeah, that's right. Even with a strong finish on Friday, the NASDAQ still down pretty significantly for the week. I believe the Russell was down slightly. Meanwhile, the S&P 500 and Dow did manage to make gains. So put this in perspective for us in terms of where we stand more broadly speaking. Is this just isolated to growth in tech, or as we finish the week here, is there any other change that can be made in overall conditions?
There's no doubt that the growth, especially the highly valued or the speculative growth names, really hard hit. Saw a lot of software, especially work at home play, saw the EV stocks, and not just Tesla, but NIO and all the others were down. Meanwhile, energy did well. A lot of cyclicals held up reasonably well. But we saw on Thursday when the S&P coming through the 50-day line, even the Dow coming down to the 50-day line, that when the market really starts selling off, there might be some sectors that hold on better, but they're still struggle to rise. And right now we need to see a character change, and that's why we don't try to get in. You want to get into a new rally soon, but not right away. You want it to prove itself, and what we look for is a follow through day, a few days into a rally attempt, and to see some real power suggesting that institutions are supporting the new rally. And this is just day one. It's a nice day, but we could easily
Right.
reverse lower next week. We could surge up. Right now, we don't really, you can see on the chart. You can't tell on a weekly chart, and it's barely there on a daily, really, when you look at it. And so we'll just have to see how that,
Hmm.
how next week projects.
Yeah, well, let's flip on over to we'll just quickly look at the S&P Dow and Russell to put everything into perspective. But like you said, just because this was day one of a rally attempt doesn't mean it's safe to confidently call a bottom here. Even with the S&P, a strong move closing back above that 50-day line.
Yeah, and it's still below the 21-day line. It's nice to see. It's nice to see if we can get back over there. Obviously, in much better shape than the Nasdaq. The Dow looks even better. That's that one rebounded from the 21-day line again. If the market were just the Dow, we would not be calling this a correction. I mean, we might have gone under pressure on Thursday, maybe, but the market isn't just the Dow, obviously. But so the
Mhm.
Dow looked a lot better, and the Russell 2000 doesn't look too bad. It never closed below the 200-day, 50-day line. It wasn't
Mhm.
looking so good this morning, but it's so that one isn't doing, hasn't doing great. But so there are some areas of strength, and that's definitely something investors should be aware of, and we'll talk about that more. But there's definitely sectors that are holding up better. If the rally moves forward, we may see new leadership.
Yeah, that's right. Well, we'll come back to a little bit more of that step back perspective at the end of the show here. But for now, let's take a look at some stocks. First off, let's take a look at Microsoft. It is pulling back to that 50-day line or the 10-week line on the weekly chart, closed up over 2% on Friday. So it hasn't broken down yet, but what are your thoughts on this pullback for Microsoft? Round tripping its gains from a buy point that we had pointed out earlier in January.
Round trip, it wasn't so high. It was up about 5%, or it depends on where you bought it, but it was never 10% from the buy points. So it wasn't a horrible sell signal. It wasn't great. And it would have made a lot of sense if you sold, especially as it was coming down here. But the buy point is still valid. It held support generally on the 50-day line, certainly from the weekly perspective. The relative strength line, not great. So there's definitely issues with it. I don't want to discount it. I would suggest that people should also take a look at Google. That may be the best looking big cap tech.
Yes.
But we just looked at it Thursday. You and Ken looked at it, so I don't want to
Yeah.
ignore that. So please, by all means, look at that one as well. But if it came above this buy point again, it would still be there. Again, the market's not in great shape, so it's hard for me to say please buy this. Another thing is, like, you probably want to get it above the 21-day line, which is basically at the same place, kind of thing,
Hmm.
or maybe even get above this area. And you could even wait to see if it forms a new consolidation in this area. But it's holding up reasonably well when a lot of other techs are falling apart. And we'll just have to see. Maybe this will be a winner in a new rally when a new rally comes in. Maybe it won't. This is one I think to keep an eye on.
Yeah, because Microsoft is a long-term leader, and buying those long-term leaders on pullbacks is something that we talk about, but getting above those levels that you are talking about, on IBD Live, we were also talking about PayPal being a long-term leader, drawing a declining CHOPS trend line, seeing if it can get above that, but also monitoring those overall market conditions as well, to see if there's further deterioration or if this really is a rally attempt that can stick. And
That's right.
elsewhere, let's take a look at VALE, VALE, out of Brazil in the mining sector, had a strong week, up almost 10%, Ed, in above average turnover. It also relatively recently reported its quarterly earnings report and talked to us about this cup with handle that we saw Vale breaking out of today.
Yeah, actually, it technically doesn't quite break out. It actually got above it, but we can call the buy point 1778, and this got as high as 1775. So, man, I don't know if it mines any nickels, but it's less than a nickel away from a buy point. Vale is. It held up better than some other miners that have done well, but mining sector very strong, 6 out of 197. So it's not like, why would I want to, slow pokey group like miners? It's like they are not slow pokey right now in the economy opening up, China, the US, construction, all sorts of things needing copper and other industrial metals, very strong. The RS line isn't at a new high, but it is above where it was at the handle. So you can see that that's showing some strength as well. And that comes after a prior uptrend too. This is not a lagging RS the way that Microsoft sort
Hmm.
of was.
That's right. Well, Mark Minervini has his cheat, so that maybe this is the alley sneak cheat breakout over those recent highs or a declining declining tops trend line there, Ed. Uh, yeah, we are continuing to keep an eye on this rotation into this group. And last but not least, let's take a look at Polaris back on our radar. We were discussing it earlier this week. Strong move to close out Friday, up over 5.7%. Some nice volume to accompany that move, Ed.
Yeah, really strong volume. Had these, basically you have almost could have called this an early entry or sometime downward slope. Again, if we were in a better market, really strong move. And it's a base on base formation coming above this, which base on base in a weak market is really strong. It's showing it doesn't want to fall. It doesn't want to fall. It wants to keep on going. And you can see that with the RS line, even when it was at its lows, it really wasn't falling that much. Powering higher, you can see the growth has already come back. Yeah, some of it might be this outdoors shift, during the pandemic, that maybe it's not going to probably going to sustain that level, but it's also moving towards EVs, with its vehicles. So, that could be a growth area down the road as well. So, a lot to like. Again, I'd be really more excited about it if this were a stronger market. It's just that it can be tough. Breakouts can sometimes pop in and then they get hammered down. So, while I definitely think everybody should be paying attention to it, it's hard to say on day one of a rally to
Mhm.
jump in. There's definitely a big high risk from doing so.
That's right. Thank you for reiterating that point. An interesting turnaround play, some strong growth posted in the last couple of quarters. So we'll keep an eye on Polaris as well as we look for this new leadership and stocks that are outperforming the market to put on our watch list. So with that, Ed, let's talk about the battle plan for the week ahead and what investors should be doing at this point. If investors have been sticking with us, like we were saying at the beginning, we were talking about taking profits into strength, noting that we were getting extended, putting more of an emphasis on sell signals, taking stock of your individual holdings and seeing where you might want to be trimming or exiting. So hopefully that has been the case for many investors over the last 2 weeks. But what else would you say on that front in terms of portfolio management at this point?
I mean, obviously, yeah, you should be very defensive. Hopefully, you sold a lot, are probably substantially, I mean, mostly in cash. If you're entirely in cash, there's nothing wrong with being entirely in cash in a correction. If you're hanging on to some stocks, I mean, a lot of the speculative growth stocks still fell today, even with the strong rally. And even those that did rally a little bit, they're down, beaten down. It's like you don't want to have hope as a strategy. I mean, maybe these stocks will come back. I think Arusha Paris on IBD Live said it very well. Maybe it'll work this time. Maybe it'll work, but it's going to come a time when it won't. You're going to have stocks that are going to fall 80, 90% and just don't come back, or they come back a decade later. You don't want to do that. So even now, you might want to be selling because, when we do resume a rally, there's no guarantee that these are the new leaders. They might rally, because we're in an uptrend, but they may not be the ones that lead. So even if you sell now, you might be better off with, say like take a fresh start, get a fresh start,
Mhm.
like going into stocks that are the true leaders in the next rally.
That's right. And we've seen the power that new rallies can have. I mean, look at almost a year ago, we saw a massive rally. We obviously can't predict the future, but that really tough market, what came out of that was a lot of great setups and a lot of stocks that was good for our type of investing. And maybe investors who were able to get in on some of those names last April, last May, and are sitting on huge gains, maybe they can treat their portfolio a little differently, or maybe those are some long-term leaders that they have in their portfolio. But there's always a silver lining to these really tough market conditions, and that's the opportunities that are going to come out on the other side of this.
That's right. When you're like, one of the issues with late in the rally is that there was not many stocks to buy because we just sort of run up. There were no bases to set up. So we'll, at this point, hopefully, what everybody should be doing is looking for what might be the new leaders and look for stocks with high relative strength. Now, just focus on that primarily, then look for stocks within those that have maybe bases forming, because some of those high RSL stocks are still extended, but look for those. And, some of them are going to be old leaders, some will be new, and they may change. I mean, some stocks may hold up and then they suddenly tank, and others that looked really weak, maybe they'll come roaring back next week. So you definitely want to be nimble and paying attention, because when we do have a new rally, whether it's next week, next month, or in the fall or winter, is that you want to get early on that rally, because some of the big winners are
Mm-hmm.
right then.
Yep.
I don't think people should be cheating on it and like jumping in and trying to guess what those new leaders are right now. But you want to get it when we do have that confirmed rally, just a few days into a rally when we have that strength. That's when you really want to be getting in, and that day, next few days, ramp up your exposure. And if you're ready,
Mm-hmm.
you can do that and buy the right stocks.
That's right. And if this week was a tough week for you, don't give up. Now is the time to be engaged more than ever, because we could potentially be another couple of days away from the next rally. It doesn't mean that those setups will quite be fully fledged, and those cup with handle breakouts are going to be perfectly forming, but we're going to be keeping tabs of the market conditions, telling you how to dip your toe back in the water. But as you said, Ed, really important to keep that watch list up to date, stay engaged, and remain flexible, because market conditions can change very quickly.
That's right.
All right, everyone. Thanks so much for tuning in. Thanks for another great week with IBD. Maybe a not so great week in the market, but we'll be back on Monday with more perspective. So make sure you're tuning in to investors.com/IBD live first thing in the morning. Start your day with us there. Continue with us throughout the day at our coverage at investors.com. And then after the close for Stock Market Today, we'll see you Monday, everyone.